Good morning, ladies and gentlemen. Thank you for joining our webinar this morning. The subject of the webinar is the impact of the COVID-19 on the economy. Of course, at this stage, it's quite hard to say what's the impact, what will be the impact, but nevertheless, for next roughly an hour, we'll try to capture what could be an impact, what are our views on that. My name is Grzegorz Sielewicz, and I'm the Coface economist covering Central and Eastern Europe. As I said, I cover Central and Eastern Europe, but nevertheless, as you will see in a minute also, I want to give you some more insights also on the global scale, because, as you know, COVID-19 is the issue that threatens lots of economies and the global economy. Maybe first of all, just some technical issues. We will start with the presentation, which will roughly take 30-40 minutes. Then we will go to the Q&A session. I will explain you in details how you can ask your questions. Moreover, you can already download the presentation for your files, for your desk. It's in this webinar tool you have on the right-hand side of your screen. You have the handout section. In the handout section, you have the PDF version of this presentation. So if you would like to have it in your files, please download it from there. Moreover, this presentation is being recorded and you will be provided, if you would like to use it or share with your colleagues, you will be provided a link to download that. So as I said, thanks a lot for joining our webinar. I can see we have lots of attendees, really lots of people interested in this subject. And we have a really great number of people from Lithuania, Romania, Russia, Czech Republic, Slovakia. Also, I can see on the attendance list many other people from other countries. So once again, thank you for that. And going strictly to the subject, before going strictly to the subject, let me just briefly mention to you what Coface is, because maybe some of you is not aware what Coface is. So we are the credit insurer, but we do not have only trade credit insurance. We also provide services like business information, debt collection. We have also factoring in Germany, in Poland. We are a company with a solid financial structure, 1.8 billion euro in capital. We have relatively good high ratings. A2 by Moody's was recently confirmed. Of course, Moody's recently estimated that the progression of the coronavirus epidemic and the measures taken by governments to slow its spread represent a scenario of severe threats for all credit insurers. We cannot agree. It's not impossible to agree with that. That's true, but nevertheless our ratings remain high, as you can see at the A2 level by Moody's. So we are doing business quite a long time, since 1946, but in Central and Eastern Europe we are present since 1990. We cover risk in over 200 countries, with direct presence in 66 countries, and actually we have credit reports on companies located worldwide. So we cover the whole world. Yeah, like from my side, we produce lots of publications, microeconomics. We really like to share them with you. Most of them are publicly available. So there are different publications on macroeconomic topics. Also, we do payment surveys to check how companies pay, what in the sector B2B, what are the credit terms, what are payment delays, and so on. We also do lots of presentations like this one on hot topics. So right now we have COVID-19. So going straight to the subject, well, COVID-19, as you know, we have a rising number of cases of COVID-19. It changes day by day. with a very high number of additional cases. It started, as you know, in China, but right now we have the aggregated amount of cases in particular countries. In some countries, is even higher than in China. I mean, here the US, Italy, or Spain, Germany. Those countries are the number of COVID-19 cases increased a lot. And definitely that has an impact on the global economy and on economies of on various economies. I think it's quite fair to say on all economies. Our recent GDP growth forecast assumes that this year we should expect a recession in global economic activity, and that's the first time recession since 2009. So as you might remember, we had the financial crisis there with a deep contraction of many economies. Well, right now, as you can see, we already 2019 was not a very good year. We expected a slowdown, but COVID-19 is a really hard hit to the global economy, and as I said, we are going into recession. With many countries recording recession. So still China and India, we believe that those countries record positive growth rates, but other big engines of global economy, they are all going to record recession. And for us, for our region, Central and Eastern Europe, Germany, I think from this global one is very important. Russia, of course, is very important. Especially Germany, France, in general, Western Europe is going to record relatively deep recessions. Of course, those figures are subject to change. We've changed our growth forecast in recent 2-3 weeks many times. Probably already heard from other banks, institutions, think tanks, and so on that they've changed the GDP growth forecast quite a lot in recent weeks. Well, and that's right. It's very hard to predict what will be GDP growth in 2020. Even the European Commission recently communicated that it expects that the European Union will fall into recession, 1% recession, but it was like more than 1 week ago. So I expect that right now they even expect deeper contraction. But at the same time, they express they wouldn't like to provide precise figures because that's too early to do that. They want to wait for some hard data coming from the economy, and then in May they will be able to make some more reliable forecast. So again, well, you can see here our recent forecasts, but at the same time, please be aware that the next week they can be changed, and it depends what will be lockdown periods, how long they will take in Europe, also in other areas, in other regions globally, how it will look like. Well, so I think it's worth to start this view on the impact of COVID-19 on the economy from China, because first of all, it all started in Asia. It all started in China. When there was the epidemic of COVID-19 in China, then it turned to be the global pandemic. First of all, as I said, let's start with that. And I think that's a good lesson for us in Europe, also in the US, how such an important event, such a health crisis, could impact the economy, the business activity. You can see on the left-hand side of this slide the chart with PMI indicators. There are navy and green lines. Navy line is the PMI published by the Kaixin Bank. NBS, the green line is the National Bureau of Statistics. So this green line is the official PMI of China. If you are not familiar what the PMI is, that's the Purchasing Managers Index that is published each month. Well, the survey is made among really a big number of companies. They ask companies about the level of production, the level of employment, changes in that, and there are also other questions. The aggregate indicator is published for manufacturing sector separately for services, but here I provided you just the manufacturing part. And it is considered to be, if that's above 50, it's a recovery of manufacturing. If it is below 50, it's considered to be a slowdown of manufacturing. As you can see in February, and let me remind you that in February we had a peak of COVID-19 cases in China, there was a significant drop of PMI indicator in China. It dropped, according to this green line, so the official measure, it dropped to 37 points. Well, that's a huge, and the survey started in 1990s, and this is all-time low. Even in 2008, 2009, we also had in China a significant drop of the PMI index, but then it reached 39 points. Now it's deeper. Moreover, we also have already some hard data from the Chinese economy, because right now, as I said previously, it's quite tricky to assess the impact of COVID-19, because in China, the huge impact was in February. In Europe, in the US, we have the huge impact. We had the huge impact in March, so we do not have so far precise data, or rather, we have a lack of data for March. So in February in China, we can see that also car sales drop a lot. They dropped by 80% in February, 80. And that's huge, and I think it comes with no surprise, because people were quarantined, they stay at home. Of course, they were afraid to leave their homes. Also, they were quite afraid to do some shopping of durable goods. And as I said, it comes with no surprise that car sales dropped so strongly in February. Then recently we have also, there were published some new data for industrial production and retail sales from China. You can see that on the right hand side chart of this slide. And as you can see, all of these factors, also including urban fixed asset investment, they dropped a lot. They dropped by double-digit figures, and we can see that in recent years we have not had such a significant and very fast drop of the activity. So I think it's a good lesson for us what we can expect here in Europe, that with this lockdown period, and we know that some factories stopped working, not only in Italy, but also we have decision of particular for example, car producers to stop production of the automotive sector of particular car brands. I think something similar to this scenario is also going to happen in Europe. And by the way, yesterday there was initial release of data for car sales in France, new car sales in France, and they dropped by 73%. Year over year, so it's quite similar to the Chinese scenario. Although, let me remind you, at the beginning of March, we didn't have a lockdown period in France, so then it started after some time. So it's not that it's a full month of a lockdown. And also coming back to Asia and lessons for us in Europe. We can also take a look at indicators, how fast companies in China resumed work after the impact of COVID-19. Well, actually, I think the main conclusion is that they did not resume work completely. It's the capacity is not 100% compared to that what was before COVID-19. As you can see, of course, at nearly end of March, so 24th March, it's much higher than it was at the beginning of March, because in many provinces in China we have more than 70% of businesses that resumed work, but nevertheless it's not 100%. And in the province of Hubei, as you know, when the outbreak of COVID-19 was the most significant, we have it, according to the latest data, below 50%, and Hubei is 4% of GDP, of China GDP. so its contribution is not very low. At the same time, if we take a look on the automotive sector in Hubei, we have 10% of automotive production in China, so that also, for example, impacts the automotive sector and even global supply chains. Why do I talk a lot about China? Well, first of all, as I said, it's a good lesson for us in Europe. But on the other hand, if we compare that what was with the SARS episode that we had in 2002, 2003, right now it's different because first of all, when we had SARS, that mostly affected Asian economies. And the second thing, right now, China is much more significant player, much more important economy on the global scale. Whatever you take, its contribution to global GDP, its contribution to global trade, also to investments, or even in terms of global tourism, which is partly also responsible for that COVID-19 spread so fast to our regions outside China. So I think here it's also fair to share with you our scenarios. We have two scenarios at this stage. Well, our baseline scenario is that what I already started to tell you. So in February, we had a peak of cases of COVID-19 in China. Lockdowns started in March in Europe and the US. That's for the first quarter. In the second quarter, we expect, or rather maybe it's more fair to say we hope, that lockdown periods will end in May, so next month. Then we'll have gradual and cautious reopening. So as you've seen in China, this rebound is not very fast. It's not a kind of V-letter recovery. We can say that the business activity, manufacturing industry, also other parts were hurt, and I think it's also quite fair to say if that would be possible to recover so fast, China would recover because that's the economy that would be able to come back to the full capacity. So then in our baseline scenario, we believe that in the second half of the year we will have the process of reopening, that it will go on. We will have no second wave of pandemic of COVID-19. Nevertheless, business and consumers will remain quite cautious. So indeed, in 2020, according to this baseline scenario, I think it comes with no surprise that we expect a recession, and closer to the year end, we will be able to see that quarter-over-quarter growth rates will again be positive. But on the other hand, we have also a risk scenario. This risk scenario mostly includes the fact that we can have the second wave of pandemic. In Asia, right now we see eased quarantine measures in Asia. For example, it started like in Hong Kong, in some Chinese provinces. And in Hong Kong, we already seen that there was an increased number of cases of COVID-19. So although people waited a lot, they expected that quarantine measures should be eased, and that's what the government also was the intention of that. We can have also again the pandemic in Asia, and also in Europe and in the US, we also could see that the pandemic is not April or the beginning of May. We can also say that even in summer months, or maybe in summer months it will be lower, but then again in autumn, in the winter 2020, we can have the second wave of pandemic of COVID-19. Well, that would be a really hard hit for economies, especially if we still do not have a vaccine to COVID-19. And of course, I'm not the epidemiologist here, but as from that what I read, that also could be somewhere in line of scenarios. So this risk scenario would be a really even deeper hit for economies that it is right now. Well, I think at this stage it's worth to take a look what are possible channels of contagion for Central and Eastern Europe. And Here, of course, first of all, let's maybe start with China. As I said, with China, it's an important economy, a global player, very large economy, and it's also worth take a look about trade links between Central and Eastern Europe and China. Here, mostly CE countries do not export a lot to China. Maybe some exception here is Russia, which is much more dependent on cooperating with Russia. With China. The structure of trade is the following: the exports take 12% of total exports from Russia, of total Russian exports, and in terms of imports, this share is at 22%. So that's much higher than in other CE countries. And here, I think in terms of the GDP level, in terms of other countries, mostly exports to China are below 1% of GDP. So we can say that even we have the second wave of this pandemic in China, exports to China from the CE region are likely to be hurt, but at the same time, it's not likely to hurt a lot the economy. On the other hand, with trade links, with external trade with China, we have imports from China, and that's much more important. As you perfectly know, China is a global supplier of various goods, also intermediate products. And as you can see on this chart, we put the economies which are mostly dependent on China in terms of possible supply chain disruptions. And as I said previously, if we have the second wave of pandemic in China, but even right now, if we have the manufacturing sector in China that has not come back to the full capacity, that's also the risk of the supply shock. And when we take a look what countries are especially exposed to those supply chain disruptions, please take a look at this chart. We put here a downstream part of this supply chain those supply chains, and by downstream we defined imports of intermediate goods from China as a percentage of total imports of intermediate goods. So this is this navy bar. The green bar is the upstream part. It is defined as exports of intermediate goods to China as a percentage of total exports of intermediate goods. So as you know, as you perfectly know, mostly it's a downstream part. As I said, China is mostly the supplier of goods to other countries. Only some Asian countries like South Korea, Japan, or going further, Australia, we can say that they export some part of the external trade is taken by exports to China. So please focus. We will just focus on this downstream part, and as you can see on the left-hand side, where we put share of all intermediate products imported from China, and those countries which are mostly dependent, we again have mostly Asian countries, but also some Latin America countries, the United States or Canada, and like in our region, it's Russia, which this share is above 10%. And on the right-hand side, you can see country by country split of Central European countries. So I told you already about Russia, and that it's quite dependent on share of intermediate products imported from China, but also we have other countries like Poland, Czechia, Slovakia, Estonia, which of course imports a lot of computer electronics components from China, and also other countries, but those shares are lower. I think it's worth to check what sectors are especially exposed to such a supply shock. And here what I did, I put on this chart sector by sector, maybe not sector by sector, by products cases, what are the shares of intermediate goods imported from China in total imported goods. Here first, those bigger economies that we have in our region, so like Russia, Poland, Romania, and Czechia. And as you can see, as I previously said, mostly Russia is dependent on imports from China, also imports in intermediate goods. And those shares are mostly in terms of computers, electronics. Here we have also electrical devices, but also textile and clothing, non-metallic minerals, partly wood and metals. Those are which are mostly imported, and those products, those sectors are quite similar in terms of other countries. As you can see, this impact is also similar in terms like Poland and Czechia. In case of computers, electronics, textile and clothing, those shares of imports is the biggest. In Romania, for example, it's not as dependent as other countries, especially in textile and clothing, where Romania sources more on domestic production, but nevertheless it's dependent on supplies from China. And here also we have some additional countries, just for your information, because I know we have attendees from these countries as well. So Bulgaria, Hungary, and Lithuania. I think it's roughly the same: computers, electronics, textiles, clothing. In Bulgaria, we have a significant part of imports of wood, machinery as well. But here, of course, as the previous chart, I will come back to previous chart, you can see that those big economies in our region, here the scale is up to 60%. Here, with those economies, the scale is up to 25%. So this dependence on intermediate goods imports from China is somehow lower. Then, of course, talking about the impact of COVID-19, it's worth to say about the transport sector. So, as you know, the transport sector already suffered from the COVID-19. First of all, of course, airlines, which immediately suffered from that. But not only airlines, we can say that overall transports has suffered from that. What's happened, and with lower volume of global trade. Here, what we put here the Baltic Dry Index. The Baltic Dry Index is a price index for maritime freight, and it consists of various components here. So the Baltic Exchange Dry Index is the navy line, and one of its component is Baltic Exchange Cape Size Index. This is this golden line. And Cape Size Index is the component that calculates the biggest cargos above 120,000 tons. So as you can see, it fell into negative territory since many years. Since the beginning of 2019, you can see that on the chart, but even going further, it fell into negative territory for the first time since it was created in 1999. So we can also say that this supply shock and that China is not again at the full capacity is also confirmed here, because we do not have the rebound of transports, and we have also concerns about various economies and global trade. And this year will be also in recession, just like the global economy. Going further to another channels of contagion, I think the very important one for our region, for Central and Eastern Europe, is that what will happen in other external markets, in markets in countries of crucial export destinations. So, for example, like Western Europe, Germany, France, Italy. And those countries are quite important for lots of countries in our region. For like core C region, Germany is the main trading partner. For Russia, of course, China is the main trading partner, but nevertheless, the European Union is also very important. So I think that a good proxy for that is what's happening with the automotive sector. And if you took a look at our publications last year, we already warned about the automotive sector, that there are significant worries, significant concerns for the automotive sector. First of all, we have had these new emission standards that companies, car brands were delayed with adopting to that. We had changing consumer behavior. We had a necessity of costly investments. And we had also a slowing demand for cars. And now we have another hard hit for the automotive sector, which is COVID-19. As you saw, the COVID-19 led to a significant drop of car sales in China. Also in France, according to the data released yesterday, as I shared with you, 73% of drop of new car sales in France. And here even just talking about China, I will give you an example of Czech Skoda or Skoda, depending how you pronounce it in your countries. That for them the single biggest important market is China. According to latest data as of 2018, Skoda sold 27% of the cars in China, and this share was the highest among all countries. So if we have concerns on China, that's also concerns for the European automotive sector. But moreover, right now we have, of course, concerns for the automotive sector in Europe. So very important destination, not only in terms of car sales, but also car components. So those automotive supply chains that many companies in Central and Eastern Europe are involved in supply chains that they produce car parts, car components that right now it is likely there will be lower demand in terms of new cars. So, well, and here the confirmation on this chart, as we already seen in previous data, that financial results of automotive companies were deteriorating with higher debt ratios and lower margins. So, of course, as I said, this another channel of contagion is very important. What will be demand? What's happening on crucial external markets? And in Germany, we expect a recession. As I showed you before, at least at this stage, our forecast is that that Germany will record recession of 6.7%. A very deep recession. And as I also said, we do not have hard data so far, but at least please take a look at those data we already have. So sentiment indicators, whatever it is, IFO, business climate and sub indicators, or on the right hand side you have DEW, economic sentiment indicators. You can see that the contraction of business assessments is very significant. Maybe it's not as deep as it was in 2009, but I think that the worst things are not over. So they are even going to go deeper. And as you can see, this drop was very fast. It was faster than in 2008 and 2019. And in terms of sectors that express their pessimism, you can see on this chart the latest figure as of March 2020. There are those orange bars. So we can see that the automotive sector, the steel sector, chemicals, pharma, and machinery, as well as electronics, they were the most pessimistic. Here only the one sector that was a little bit optimistic was the IT sector. But at the same time, if you compare that with the January figure, so this green bar, the deterioration has been seen here. So indeed, in our crucial export destination of Germany, there are lots of concerns, and I think they will be. I'm sure they will be also confirmed in other hard data released. So also in terms of Italy, because Italy for one countries like Balkan Adriatic countries like Croatia, Slovenia, they are important. It's an important trading destination. For other countries, maybe not as important, but nevertheless still in top 5 or top 10 trading destinations. So in terms of Italy, with the economy is strongly dependent on services, much more dependent than France and Germany. and this lockdown period that we have right now definitely will affect Italy, and right now it is already affecting Italy. Our recent forecast for Italy is that the recession will reach 8.2%. So again, very high figure in terms of the contraction. We already before seen some sectors in a fragile position in Italy that include those sectors with high debt ratios, so like metals, services, transports, and agri-food. They will all be moreover hit by the impact of the COVID-19. And in terms of trade links of Central and Eastern European countries, the most trade links, as I said, are in countries like Croatia and Slovenia, also Bulgaria. But in other countries, I intentionally didn't put Russia here because Russia is not as much dependent on trade links with Italy that Central and other Central and Eastern European countries. So even in terms of other countries, I think we could also suffer from that, because here this chart you have the percent of GDP. So especially for countries where they are exposed to exports and imports, that there are open economies, so smaller economies like Slovenia, like Croatia, they are very dependent on on the external markets. In Romania, in Poland, of course, in Russia, those economies can base more on the domestic side, and they are not as dependent. But staying with these trade links with Italy, I also did something similar like I did with China, so shares of intermediate imports, but here not only intermediate imports, but also intermediate exports, to check indeed what's the part of goods that are exported to Italy and imported to Italy, because at the same time, like the possible supply shock from China, we see the risk of the supply shock from Italy. So what are the categories of products that are especially exposed? Here you have the average for CE countries, and here textiles and clothing are the mostly exposed, both in terms of exports and imports. Yes, indeed, where the Italian manufacturing sector of textiles is very important. There are trade links in terms of components, but also final production to and from Italy. So that's one that is mostly exposed, but not only. We have also a significant share of imports of intermediate products of non-metallic minerals, so those like building materials, rubbers and plastics, machineries. I think white goods sector is a very good example of that Italy is a significant supplier. Also metals, with food and beverages, and also transports with higher share of exports from CE countries there. So indeed, in terms of supply chain disruptions, we should be aware that those risks is also coming in terms of trade links with Italy. Then going further with with the impact of COVID-19, it impacted, of course, I said about airlines, but it impacted also very fast the tourism sector, tourism, leisure activities, and so on. And here again we have the Adriatic countries, Balkan countries, like with the significant share in terms of Croatia, the share of tourism as a percentage of GDP, but also quite harsh shares are in Estonia, Slovenia, Bulgaria, and those countries depend also on tourism, which is right now suffering. But especially if we approach our risk scenario, especially if the COVID-19 will still apply even in summer months, that will be a really hard hit also for these countries dependent on the tourism sector, because right now the summer holidays, summer vacations have not started. So this really the full impact has not been perceived so far. Coming finally to another channel of contagion, which is, I think, the most important. So what's the impact of COVID-19 on our economies, on domestic economies? So it's important to be aware of that, what's on the external market. So this supply shock, I said, from China, from Italy, also the demand shock on external markets with a lower demand on crucial external markets. But here right now we approach the one that is very important, so what's happening on the domestic side. We this week, just yesterday or on Monday, there were released first data for countries in our region. So far there are only confidence indicators. We do not have hard data like for retail sales for March, of course, yet. We do not have industrial production, but here I wanted to take a look at confidence indicators. Here I put those where those figures are available, so we do not have for Russia yet. We have for a number of CE countries. I also put here Germany as our crucial trading destination, just to see what's happening there. And what's on this chart? You have confidence indicators for particular sectors, particular parts of economies. So like industry, this is navy color, navy bar, retail, green bar, consumer consumer confidence indicator, golden part, and services confidence indicator, those red bars. Here you can see the change that was in March 2020 against February 2020. So how it changed in March this year compared to February this year. And as you can see, in all countries, mostly in all countries, we have had significant deterioration. And while the most significant deterioration, like in services and the retail, is in Germany, but in our region, we have also a significant deterioration in Croatia, in Lithuania in terms of services. In terms of industry, we have Croatia, Lithuania, Poland, Czech Republic, that the perception of companies in terms of their confidence, it decreased a lot. We have some exemptions here, like for example in Slovakia, when you can see that the industrial part only contracted, retail and consumer and services improved. But on the other hand, when I digged more into detailed data, the contraction in Slovakia was already perceived in January and February. So comparing March to February, we do not have such a significant contraction because it contracted already before. And digging more into data, there were also some questions asked to companies about the business activity in the retail sector or the production expectations in next 3 months in the industrial part. And they are even more pessimistic than you can see from those general confidence indicators. So as you can see, and I think it's very justified that the impact of COVID-19 is coming to our region. Here, I think the very important question in terms of this channel of contagion, so the impact on the domestic side, is a question of, are we ready to tackle with the COVID-19? And here, well, it's difficult to answer that question, but here I put some health and fiscal indicators. Of course, more to that, we can put some macro indicators I told you about. So, for example, dependence on exports and imports. So, how vulnerable countries are to that, what's on the external side. Sorry, on the external side, and especially those smaller economies like Croatia, Slovenia, or Slovakia, from larger economies, parts like Hungary or the Czech Republic, they are more dependent on external trade links that, for example, like countries like Poland, Romania, and Russia. And also the share in terms of the the share of the tourism sector in the GDP. We also talked about it. And here, well, of course, let's start talking about those charts. First start with health indicators. So that's what you can see on the left-hand side of this slide. So here I put two indicators. On the x-axis, you have healthcare spending as a percentage of GDP. So of course, at least in theory, it should be better if the healthcare spending is higher, yeah, as a percentage of GDP. On the y-axis, you have health security response capability. And this comes from the ranking from indexes that are made by the Global Health Security Index. And the higher index is, the better. So the better country is prepared in terms of the response capability when there's some significant issue like it is right now. So here you can see the countries which are in the best shape are countries on the right top part of this chart. Those countries are, maybe let's try to, those countries you can see are countries that, at least in theory, are in a better position to tackle with COVID-19 in terms of the situation of the health system. So countries like Latvia, Hungary, Czechia, Poland, Estonia, and Russia are quite well prepared. Of course, we have countries, for example, like Bulgaria, when the healthcare spending is high, but its response capability, at least according to this GHS index, is much lower than in other countries. Of course, that's not the full picture, because in Italy, for example, the health security index is quite high, although they were not, as we know, quite good in tackling the COVID-19, but well, such a high number of COVID-19 cases was really that one that it was very difficult to have appropriate response capability. Then, in terms of fiscal indicators, so countries on the chart on the right-hand side of this slide, we have on the x-axis the budget balance, and here, of course, we have some countries with surpluses in terms of budget balances. That's of course much better, because they have some more resources to help the economy to introduce fiscal stimulus measures. But we also have some countries with deficits, so with negative budget balance. And on the y-axis, you have the public debt as a percentage of GDP. So it's of course better when countries have lower public debt. They capability to respond via fiscal tools will be better with lower budget deficit and with lower public debt. So here in this chart, we have countries, especially I think the Russia is the evident example of the good fiscal situation here. We have also Czechia, Lithuania, Estonia, Latvia, Bulgaria, partly Poland, when those fiscal indicators are in a relatively good position, and they can tackle with COVID-19 by at least partly with introducing fiscal measures. On the other hand, we have Romania, which used the fiscal stimulus already in previous years, in the years of relatively good economic times, and right now with relatively high budget deficit, it will be more difficult to introduce fiscal stimulus measures, although I believe that the European Commission will not be as restrictive as it was previously when countries will extend their budget deficits. Well, so here, of course, we have to be aware that countries already started to act. We have various fiscal stimulus measures introduced by countries. In some countries, they are equivalent of even 10% of GDP, so that's quite a lot, of course. Still, there's a question, is it going to help? According to our view, it's likely to soften the impact of COVID-19. But of course, it will not reverse it. It will not compensate this impact, this negative impact coming from the COVID-19. Fiscal measures are not the only one that were introduced. Also on the monetary policy side, we had, of course, big central banks, so like US Fed, which cut interest rates by 50 basis points as a first step, then by 100 basis points. Those two moves were done before the scheduled meeting. Then we have also the European Central Bank, which introduced some additional unconventional measures with a possible cut of interest rate in the Eurozone. We had many other central banks also in our region, first in Serbia, of course in Czechia, in Poland, very conservative bank. It introduced not only cutting interest rates, but also it implemented the quantitative easing program for the first time in the history. In Hungary, we have some liquidity measures. In Romania, we have also particular measures. So really, it has been seen that central banks are also ready to support the economy. So, of course, as I said, it's good that such moves were quite fast introduced. On the fiscal side, it's not so fast because usually they have to be approved by the parliament, by the president, depending on the legislative process. But nevertheless, I think it's coming quite fast. However, it's not going to reverse this negative impact. It could just soften that. So indeed, in terms of our region, it's quite important to be aware at least what could be the impact, because as I said, still we are waiting for data to see the impact of COVID-19. And then finishing, because sorry, I told you that I will be like 30-40 minutes, but I see that I'm behind the schedule. So just the last point from me is that I've already told you about the supply shock and the demand shock. On the global scale, we see that those two shocks are very important results of COVID-19 on the economy. But at the same time, we have also another important shock for the global economy, which is the commodity price shock. As you know, the oil price dropped significantly in recent weeks. Actually, today the Brent oil barrel is at $27. And that's the level that is lower, not only that it was in 2016 when we had a significant drop of oil prices, when the production and exports from the US fields came to the market with significant volumes, but also when we had the contraction in 2008-2009. The current price is the lowest in the last 17 years. It's first of all, it relates its cost first of all by lower demand because of COVID-19, because of those transports I showed you, we talked about, but also from the recent decision that the break of the OPEC plus countries deal, countries like Saudi Arabia, Russia, and they have not agreed, and other countries, they have not agreed to extend the output deal that affected the market, the oil market, with oil prices. And well, I said this is the commodity price shock, and that's also another significant issue for oil exporting countries. As you can see from this chart, in most countries, even if we expect some slight rebound of oil prices, maybe in next months of this year, but not in a short term period. So in next weeks, we expect that oil prices will not rebound. So at this price level, most of countries, their fiscal break-even prices are above the current price levels. So For them, there are really hard times, especially for countries like Iran, like Algeria, Oman, Libya, also Saudi Arabia. Their budget deficits will go higher. Of course, Russia is an important oil producer here. In terms of Russia, it's lucky to have a very low fiscal break-even price. There were really reasonable steps made after a significant drop of oil prices that we had in 2016, with proceeds put aside to the national fund. So it's likely that Russia can live for months or even some years with low oil prices, but nevertheless, right now it also has lower proceeds from oils, and this situation on the oil market is definitely harmful for oil producers. It's beneficial for oil consumers, so like other countries in Central and Eastern Europe, which usually do not produce oils, they usually consume imports oils when prices are lower. And for example, for the transport sector, it's a good sign. But staying with the transport sector, it has so many challenges with lower demand, with travel bans in terms of, for example, queues at borders and so on, that even lower oil prices, it's not a relief here, and it not compensates those challenges. So well, that's basically the picture that you can see from our point of view of the impact of COVID-19. Again, we wanted to have this webinar to share with you our views. Nevertheless, in terms of our region, in terms of Europe, it's still quite early to check, to see on hard data, because they were not released. We will be awaiting for this data, but at least we can make some estimations. I hope I didn't make you too negative on that, but unfortunately we have to be aware that this is a significant threat of this. The impact of COVID-19 is a significant threat for many economies, for the global economy, and we should be aware of that. So right now, let's switch to the Q&A session. So on the right-hand side of your webinar tool, you have the questions window. So please use this questions window. Please type your questions. Please write your questions there, and then I will be able to read it, and I will do my best to answer them. I encourage you to ask questions. Okay, so we have the first question. In relation to China impact in the world economy, can you share with the audience the price evolution for pig meat, which was impacted by the African swine fever? I believe you are not all aware of the mechanism. Thanks for this question. I think it's important indeed. I could also mention about it, because it impacts inflation in our countries. So as I said, by the way, this impact of lower oil prices could have positive effects on inflation going that lower. But on the other hand, we have had recently an increase of food prices that included many categories, fruits, vegetables, but also meat. And the meat was strongly impacted by the African swine fever, with China being a big producer of pork meat, but also in our region we have countries like Poland, Romania, Baltic countries, Ukraine, that are producers of pork meat, and they were also affected by the African swine fever, and it impacted increase of meat prices, especially last year, and also in the first quarter of this year. We expect that this impact for the inflation and also the impact of prices will be rebounding since the second quarter of this year. Okay, let's go to other questions. How COVID-19 will affect logistics transport services in Europe? Well, I think that it will impact a lot, at least for the time being. That we have Central and Eastern European countries that are very active in terms of providing international services in the transport sector. As you know, for example, cabotage services, there's a significant part for a number of Eastern European companies. They use the labor cost competitive advantage to be present on Western European markets. We have this mobility act that already started to be suffer that transport companies started to suffer from that. And right now we have, first of all, lower demand that is in Europe, and according to our view will be lower in Europe in next weeks. Moreover, we have also some issues on borders with in some days really long queues on borders that it does not enable to transport goods. So I think in next weeks it will be a significant that will be a crucial impact for the transport sector. We still hope that our baseline scenario will be the one, and when the lockdown periods will finish, when there will be again factories working in Western Europe, we probably will not have, as I said, the V-letter recovery, but hopefully the U-letter recovery. So closer to the second, well, or rather in the second half of the year, we can see that there will be more demand for transport services, and it will be for that. It will be some time to rebound from that. Okay, another questions. What is the forecast for China's economy recovery? Would it go as a V recovery in April? Well, we have two scenarios for that, as we do not have data, although China is quite fast in releasing GDP growth data. Our baseline scenario is indeed it will be a V recovery, because, as I said, China is the economy that, if it is possible to produce more, it's going to do that. So on the other hand, we have in Europe, in the US, lower demand. So its export situation, Chinese exports are not going to be as dynamic as they would like to have it. But on the other hand, Chinese export as a share of the GDP is a little bit more than 30%. And they still hugely demand on investments and household consumption. In terms of investments, that was the move that was done in last years to be more dependent on investments and also to stimulate investments. So that's, at least it contributes to the V recovery in China. But in our risk scenario, especially if we have the second wave of pandemic, we expect that, well, hopefully the deepest contraction of the economy was already in the first quarter of this year, but this recovery will take like 2 more quarters to come back to previous levels. But then afterwards, of course, in China we have many structural issues. We have had a trade war, which actually will be still valid in our view, even after COVID-19, even during COVID-19, where economies are likely to be more protective to protect their companies, to protect their markets. So still we have to be aware that beside the COVID-19, we have also this concern of the trade war that is still valid. So the Chinese economy will definitely grow not as it was, for example, in previous decade when it grew by 10% in some years or even more. Right now we have to more to be used to growth rates in China like 5% or rather below 5% annually. Okay, let's take another questions. Okay, we have also a question in terms of Baltics. Which Baltics country will suffer the most from the COVID-19 in your opinion? Well, that's a very good question, but as I said, currently it's quite difficult to make like more precise estimations. But here, well, I think that in terms of the Baltic countries, all of them are very vulnerable to that what's happening on external markets. So when we have countries like Russia, Poland, Romania, when the lockdown periods, when the quarantine measures will be eased, for them it could be more easier to depend on domestic demand and to recover faster. For Baltics, I think it won't be possible so fast. I think if we have the supply shock, for example, from China, Estonia is significantly exposed to the supply shock from China. But nevertheless, also in Lithuania, Latvia, the situation will not be significantly better. So I think we have to be aware that in terms of all Baltics, that the impact is going to be significant. Even I don't remember the precise figure that the latest Lithuanian central bank produced, but they were very pessimistic also in terms of the level of the recession in Lithuania. So yeah, that's basically my answer. Okay, next questions. We have a question about the recording of the webinar of this recording of this webinar. So we will share with you links. You can download the webinar with the recording. Then in terms of other questions, okay, we have regarding the US, very interesting question. What were your assumptions to estimate such a low drop of the US GDP? 0.9%. I'm just checking our latest data. Yeah, indeed. A full lockdown for several months will destroy a lot of service businesses, which take part a large part of the U.S. economy, and will take time to regenerate. Yeah, that's a very good conclusion actually. And to be precise, we are trying, because usually at Coface we update our GDP growth forecast on a quarterly basis, but this situation is completely different. Those latest figures we have, were done roughly 1 week ago, I think maybe 1.5 weeks ago. And at that time, we have not had such a significant increase of cases in COVID-19 in the US. It started to bite the US, but nevertheless, right now it's a huge problem. And I agree with you that the next update we will approach. And I think the US economist is working on the update of that. So well, apologies that it's not valid, but right now I think we can change GDP growthcast almost on a daily basis, depending what are developments there. And definitely I agree with you that this 0.9 is too optimistic. It will be much deeper contraction in the US. Okay, let's go further. We have a question about the oil prices. When do you assume the oil prices will get to $40? Well, to tell you the truth, we expected before that indeed the average price will be at $40 in 2020, so that it will go up compared to previous levels. Our current estimations are that it will start after those lockdown periods will be eased in Europe. So we expect that closer to the second half of the year, we will see increasing oil prices, especially when at that time businesses will be coming to bigger capacity of business operations. There will be bigger demand for the oil. But nevertheless, we have in our risk scenario, we have that oil prices will remain roughly at a very similar level, so below $30 per Brent barrel. But yes, in terms of our baseline scenario, we expect that beginning of the second half of the year will be the period where oil prices will go up. There was another question about oil prices, but I think I also answered that just a minute ago. Okay, how do you expect the COVID impact to be on Central Europe in bankruptcies and unemployment, as well as overall consumption? Well, that's a very good question, and actually I forgot also to mention that. So if those what we have right now, especially on the domestic side, so with lockdowns, with decreased retail sales, with decreased activity, if that lasts for longer, that will definitely affect the labor market. In previous years, in previous quarters, in previous years, we said in lots of our presentations when I had on Central and Eastern Europe that we have the improvement of the labor market from the point of view of households. Household consumption was the main growth driver in a number of economies. For the region, it was really a growth driver. We had some fiscal stimulus measures, for example, in Poland, in Hungary, in Romania. So the household consumption became the driver for GDP growth. And it seemed that this situation with such low unemployment rates that will last for longer, maybe not that the bottom of unemployment rates was reached, but nevertheless the estimations were still that there will be a favorable situation of the labor market for households. But right now, as I said, when we have longer periods of lockdowns, and already right now we have companies, it's expressed in business surveys when they say that they already start to lower employment, when they think about cutting costs, and cutting costs not only like operational costs, just the basic ones. So, for example, decreasing car fleet or something like this. They have to, because that's a significant crisis. They will have to decrease employment, especially if those supply measures coming from governments are not sufficient. So then we will have an increase of unemployment. If we have an increase of unemployment, of course, households will not be so willing to do shoppings. They will just focus on daily necessities. And this household consumption will not be as significant, not only significant, but it will stop to be the growth driver for the region. And I would see that for next quarters or even years, that we could have a significant impact coming from that. Then it's quite clear way also to bankruptcies, not only from the decreased household consumption, but even right now when we have the industrial production going contracting affected by lockdowns. So we already expect in our models that in most countries insolvencies will increase. They will increase in Europe, in Western Europe, in Central and Eastern Europe. At this stage, it's difficult to provide precise numbers. As I said, it's difficult to provide numbers in terms of GDP growth forecast, and I think it's even more difficult to predict precise GDP growth forecast, business insolvency forecast. But I would expect that in our countries, unfortunately, they will increase by double-digit levels this year. Okay, another question, another very good one. What about currencies rates, US dollar and euro? We've already seen that our currencies in Central and Eastern Europe, they depreciated. It's quite obvious when we have such a risk factor. The currencies of emerging markets are depreciating. In Russia, of course, we have the currency, which is also still very linked to prices of oils. Well, on one hand, of course, depreciating currencies are positive for exports. It boosts competitiveness of exports, but here, as I said, we have concerns in terms of demand. So what if there's a higher competitiveness of exports, if there's contracted demand? At the same time, we have a significant part of imports that is going to Central and Eastern European countries, and then they're dependent on imports and on higher imports where currency is depreciated. That, of course, will it is going to negatively impact inflation of imported goods. So in terms of estimations, so well, we believe that hard currencies like US dollar, like Swiss franc, are going to be a kind of safe haven still. So they are going to be strong. So it lots depends, of course, on the actions done by central banks. So, for example, the Russian central bank started to act to defend the currency. So I think it's more will be done by local central banks to adopt the levels of the currency that are good for economies. Of course, we have some number of economies in Central and Eastern Europe that are included in the eurozone. So for them, it's quite more tricky. Here, as we can say, that there are examples of previous crises. For example, when we have in Spain, we had a crisis in 2020, 2013 with the recession in the eurozone, when they had to lower the labor costs significantly. So just they had to lower salaries, wages of employees, and that was a very drastic measure. But it's also possible that such measures could be implemented not only in our region but in Europe in general to increase competitiveness. But more to that, I think that also applies to our region. We'll have more switch to digitalization, to automatization of production of processes, to robotization, and that just to increase the productivity rates of companies. That's still the factor that compared to Western Europe, in many countries we have productivity rates lower than in Western European businesses. Although in our region that factor improved a lot in recent years. Okay. There's another question. When should the markets of Italy and Spain recover and start to function properly? Well, I think for for those markets, for those countries, the main thing right now is to tackle with the health crisis, because indeed those two countries in Europe, they have a significant acceleration of cases, especially Italy. It's something that it hurt a lot the health system, for example, in Italy. So first, when we can see some positive effects on the battle with this health crisis, then we can estimate some economic recovery. But I think it will take time. I think that in the baseline scenario, which is fortunately an optimistic scenario, it's not that neutral scenario, but it's right now the optimistic scenario. I think it's going to be in June at the earliest. Okay, thanks a lot for your attention. Thanks a lot for many questions, very interesting questions. And sorry to be too long. I hope anyway it was interesting to you. Well, as I said, we organize many webinars, so not only on the COVID-19, on the situation of the global economy, in particular countries, we focus only on countries, on the situation. Also, we do on some legal issues or on our business approach. So if you would be interested, I encourage you to attend our webinars. Well, so far, thanks a lot for joining our webinar. As I said, the link to the recording will be provided to you. You have also this presentation in the handout section of this webinar tool. So thank you once again. Stay healthy, and hopefully we will see each other. We will talk to each other at our next webinars. Thanks, and have a good rest of the day. Goodbye.